Hi, I'm attorney Gregory Dell, joined by attorney Rachel Alters, and we're going to talk about lump sum settlements and or buyouts of long-term disability insurance policies. And Rachel, the situations where this come up and we help negotiate these lump sum settlements on behalf of people is when they've been on claim for a certain period of time and they're interested, instead of getting benefits every month, they want the possibility of having one check that buys them out of the policy, no more relationship with the disability insurance company, and once they sign that agreement and have their money in place, they can do whatever they want, the relationship's over. It's kind of like a divorce, except it may be happier because, I don't know, happy or sad. Bottom line is you're done and it's over.
Right.
So we offer this service where we've literally negotiated thousands of lump sum settlements over the years with almost all of the disability insurance companies, although not all of them offer this. So I want people to know what to expect, how we help, what the advantages of having an attorney negotiate these. And the first thing is that if you're going to help someone with a lump sum buyout, what do you need from them in order to begin the process?
Well, usually the first thing I ask somebody if they come to me initially and say, I want a lump sum buyout is, well, how long have you been on claim? Because a lot of times people, right when they get approved for benefits, they often say, oh, will they buy me out? And normally that's not something they're willing to do because the insurance carriers like to see that you're going to remain disabled, likely to be disabled throughout the term of the policy before they go ahead and offer a lump sum. So that's the first thing I ask them, is how long they've been on claim and also what they're on claim for.
And since you mentioned, you want to know how long they've been on for, what's the minimum in your mind that someone has to be on before they'd even be a candidate for a buyout?
I usually tell claimants that they have to be on claim at least 24 months because most long-term disability policies, especially group policies, they have a change in definition after 24 months. So for the first 24 months of benefits, the definition of disability is whether you can do your own job. And then it changes to whether you can do any gainful occupation. So until the claimant actually qualifies for that disability benefit in the any occupation stage, the insurance carrier usually won't consider a buyout because they're thinking, oh, well, we might be able to cut off their benefits. But once that any definition of disability is approved, they're more likely to be on claim for a longer period of time.
Right. I think 2 years is really a safe estimate to tell somebody they shouldn't even be thinking about a buyout before then, even if it's not a change of definition, because a lot of people have individual disability policies that are own occupation. But the disability companies want to see, is there going to be an improvement? Is there going to be a change? Are you going to go back to work? What's happening with your medical condition? So 2 years would be a minimum. The other thing that affects time as well is that if a person hasn't been approved for Social Security disability yet. So even though you have that change of definition of 2 years, most people get denied Social Security disability initially, and then it takes 2-3 years to figure that out. So disability companies will not often consider a buyout until they know the Social Security is done because with the group policies they do an offset, and then it reduces the amount of their exposure, and then they'll calculate the buyout. I also see with buyouts too that if someone has a minor and they're getting the benefit, sometimes you want to wait until the minor offset, because if those are primary offset and then there's an offset for the children.
Sure.
And if your child's going to be 18 and you're going to lose the Social Security disability payments for your child, the disability company doesn't care that it's going to go away in 2 years. They don't think like that. They look at what the benefits are today in terms of calculating a lump sum buyout.
Right. Okay.
So first thing is you got to wait at least 2 years. The other thing is that I know you're going to want to see the policy. And why do you want to see the policy in order to determine, to help negotiate the terms of a buyout?
Well, there's a lot of different reasons because some policies will have limitations on certain disabilities. So if you have a mental nervous claim, for example, you're likely not going to get paid more than 24 months. If your policy has a limitation for any kind of soft tissue disorders or musculoskeletal disorders, that's not going to be something that an insurance carrier is going to buy out because they're probably only going to pay that for a couple years. So that's extremely important. Also, whether there's any kind of COLA increase. Some policies have a COLA increase, and that would be important in factoring the amount of the benefits that you're calculating.
In some rare circumstances also, I've found that there's been a mistake all along in the policy. Either they're not paying the person the right amount of benefit, or they've been considering them residually disabled when they should have been total, or they think that the policy ends at 65, but in fact it's a lifetime benefit, or like you said, they think it's 24 months, but it's really 65. So it's important just to have that initial review and know the world of what are the terms of your policy. getting a calculation as to, even looking at the policy to understand the calculation, because there could be a COLA, like you said. But once you go through this whole policy and you work with an actuarial expert to determine a present value of the benefit, let's get into how the actuary comes up with this number and how disability companies determine a value. Because a lot of people think it's just, I have 10 years left at $5,000 a month, so it's 120 months times 10 years, and that's the number.
Right.
But it's not that way. Explain how the buyout process works.
Right, that's common. Most claimants will come to me and say, okay, they owe me $200,000 in benefits till I'm age 65. That means I want to get 80% of that as a buyout. And I explain to them that the calculations don't work that way. A lot of factors go in, and oftentimes the insurance companies don't even reveal what they look at. But we kind of know because we've been doing this for so long.
Right.
But what they do is they reduce that number to a present value, whether it's at a 5% reduction rate or whatever that may be. So that number is going to be in present day dollars. And then on top of that, they look at what your condition is. So if you have a condition that may decrease your life expectancy, and maybe, in their mind, the insurance carrier's mind, you're going to die before age 65, they take that mortality rate into account and they actually make that number lower. So they look at that, they look at all kinds of different factors in lifestyle and things like that, so that, the number, instead of being 200,000, may actually only be 125,000. The starting number. And then they go from that number and they offer you a percentage. And usually the percentages for buyouts range between 60 and 80%. We like to see something closer to the 75 or 80%, but the insurance carriers aren't always willing to go that high. But that's where we come in and we try and negotiate all of those numbers to get them as high as we possibly can.
Right, and I think a lot of people don't understand present value, because
Sure.
the reason the disability company doesn't look at the future value, which would be 10 years times whatever the remaining time is times the monthly benefit, is because the disability insurance company is not required to pay you for the rest of your life or till the policy ends. It's a month-to-month evaluation. And the other thing to keep in mind is that the disability insurance company, they're in business to make money off of premiums that people pay. So they know they're going to owe you this stream of payments over 10 years, but they only pay it out month after month. So the question is how much is $200,000 over 10 years worth today? And you mentioned an interest rate of 5 years or something like that, of 5% over, whatever it is, but you can take $200,000 over the next 10 years and say, how much do I have to give you today at an interest rate of 5% to equal $200,000? And that number is always a lot less than what the future number is. So we obviously will review that with anyone who calls us, but that is the norm, and that's normal, and that's the way it's done. It's not an insurance company trying to scam you.
Right.
And then on top of that, insurance companies are never going to want to pay 100% of what the present value number is, because it's not a made-up number. It's the real value of the dollars today over the next 10 years. So of course they're going to want a discount on top of that. And where we come in is to negotiate the highest, to try to reduce their discount as much as possible and get the claimant the highest dollar value possible. And there's a lot of factors, and there's really too many to discuss here, but that go into trying to get the disability insurance company to increase that number. And there's different scenarios, Rachel, where we're approached to get involved with a buyout,
Sure.
which you can talk about. Sometimes, people get the offer already, and how do you help those people who have received an offer already?
Right.
In terms of, we're not going to charge a fee on what the offer is already. We're going to work with you, try to get the offer higher, and we do it all the time, and then charge a percentage of the increase that we get. There's other people who've never had an offer, and we approach the disability company, and we're going to get them an offer, and we charge a percentage of what that offer is. So we're never going to charge anyone unless they take the offer, and we only handle these on a percentage of the settlement that we get for the person. So it's
Right.
There's no risk, no obligation on anyone to work with us, and our goal is to get the number as high as possible. Now, for someone who's out there and goes, this all sounds great, is the disability insurance company required to offer them a settlement?
Absolutely not. So some carriers are happy to do it.
Right.
Certain carriers, like Hartford, does them a lot. Sun Life will do them. Certain carriers will not look at lump sum settlements. So it depends on the carrier. Oftentimes, for them, it's what they have in their reserves. It depends on they have a whole department that deals with buyouts. So
Right.
it's not always it's not always something that they're willing to do, but I always say to the claimant, it doesn't hurt to ask. And the other thing they always ask me as well, if we ask for a lump sum buyout, is there, and they do offer it and I don't accept it, are they going to cut me off? And usually the answer to that question is no, that's not,
right.
It's not going to affect your claim. You'll still remain on claim monthly if you don't decide to take the buyout because the number wasn't high enough for you.
And you did bring up a great point, because a lot of people don't get offers solicited
Right.
to them, but we have the in-house contacts we've been dealing with for the past 20 years of the same people we work with who their job is to do buyouts, and that's who we
Right.
reach out to. And people do often say, well, does it look bad that I want a buyout?
Right.
And the answer is absolutely not, because it's almost like you have this contractual agreement with them, this stream of money, and you have a need for the money for whatever reason it is or something that you want to do. And the disability insurance company, if they think that there's no issues with your claim, they may be inclined also, if they're going to save money, they're in the risk business. If they're going to save money and they think you're going to live till the end of this policy and be on it for that period of time and they can save money, then they may be interested in doing that.
Right.
Not to be confused with the lowball settlement offers that sometimes come out of Sun Life or some other companies where they're saying, here's $20,000, take it or we're going to cut you off.
Right.
Those more often than not should never be accepted, because that's like, hey, that's a threat.
Right.
This is more of your claim's pretty solid and you want a lump sum of money. So what I encourage people to do, no matter where you live in the country, reach out to Rachel, myself, any of our lawyers. Will immediately provide you with an initial free consultation. We'll review your policy. We'll review the value of your policy. We'll let you know what we think would be a reasonable buyout offer. If you've received an offer, please contact us, send us a copy of the offer. We'll look at it. And right away, we're going to let you know what we think we can do in terms of getting you more money. If we don't think we can do anything, we're going to candidly tell you right away. If we think we can get you more, then we'll be happy to help you, let you know what we charge, and immediately jump on it. And when I mean immediately, like, this is something that it's a right away process, and this is something that's done within a matter of days. Sometimes we've turned it around in 24 hours, so it just depends. And we also very often will basically become a quasi-advisor to, does this make sense for you? Are you taking it? We don't want people to take it because they're scared. Why are you taking it? Does it make the most sense? And tell you who you should consult with if there's tax implications
Right.
or different things like that. So no matter where you live in the country, we look forward to the opportunity to help you with your disability lump sum settlement.